What's going on, ladies and gentlemen? Eddie Harvey here from TradeWithAir.com. Hope you guys are having a great day. All right, guys, it is Thursday. I'm here just to drop a couple of trading tips to help those of you all who are in the markets or looking to get into the markets, and just share some analysis on a pair. And today we're going to be talking about Euro USD, guys. So let's get into it, guys. I'm actually in a trade on Euro USD at this moment, and I just want to, share with you all why I took this trade and a few things that I'm looking to happen and what may potentially happen. So let's get into it, guys. So looking from Euro USD, even if we go back to beginning of January, Euro USD, the banks from this low pushed price up, and it was in a bullish market, had a pullback here and went to some consolidation, right? Or you could call it a base consolidation, then it rallied up some more, right? And pushed to the upside. So where overall the market was bullish and until we got to last week, and it got to a point where you can just pretty much say it's been consolidating. But within this consolidation, there are still moves you can make, right? Still trades that can be taken. If you look here, overall, this is like I said, a big pocket of consolidation because it was definitely creating a lot of equal highs and equal lows. So if you look at all of this right here, this is pretty much a big box of consolidation for the most part. So now if we look at what do we have here, let's break down what's going on in here. So once the banks, they push price up, right? If you look right here, this is still manipulating the market, right? They shot a big bullish engulfing candle. This candle right here, guys, engulfed obviously this smaller candle, because if I look at this, that was probably even if not those two, this one for sure, this was a bearish candle, right? Shot price up, took out from this past consolidation zone, right? You had a lot of people that was buying and selling, because on the same thing as you see here, this is just a smaller version of what you have right here. Pocket of consolidation is base, right? So people were definitely placing buy orders right here at this low, right? And had all of these stops under here. And on the flip side, you have people that were definitely placing sell orders up here and had their stops on this side, okay? So even if right here, this is a place where they could have, anyone that was selling right here could have got stopped out. This is an impulse candle out right here. It pushed back in, right? Came down a little bit, then it shot up, right? And if you look right here, same thing, market impulsed out. So anybody at this point that was selling, all of them got wiped out. Banks took that money, took out liquidity, came back down into this, right? Came back down into this candle here, right? Even if you look into this last bearish candle right here, came directly, didn't even go under it. So this is a place where someone could have took a potential a potential buy in the market, pushed down, and then price shot back up, and it went up. And from this point, it pushed up to this level where it started creating these equal highs right here, right? Then came down low, and then from here, it pushed up again, one touch, two touch, three touch in this area. People were definitely selling right here, because if you look at this, come up here, down here, up here, you have an M giving you a good old, double top, right? And this is actually a triple top, and then people were selling down, which you could have sold down and definitely called profits, but then you got to this zone here, right, where it created this level of support. And it was just bouncing back and forth, and in here, you have multiple areas where you see double or triple tops, and people were selling off of that, and double or triple bottoms, and people were buying off of that, right? Back and forth, back and forth. And for me personally, looking at that, that's something where you can make some money off, but you want to just be cautious about getting trapped up in one of these zones based on what you're looking at, right? So looking at this here, coming over, after this, price came to this area right here, created equal highs, equal lows were created right here, then price pushed up out of here, broke out of this zone, came down here, right, took out all of the orders here, took out liquidity down here, and then they pushed price back up. We got a lot of back and forth going up and down. The one thing I'll tell you guys, the first thing I'll say is you have to be patient in the market, right? You have to have patience, and you have to definitely look at stand true to your strategy. So depending on what you're trading, you know, you have to look at and understand what you're seeing, because I see consolidation, but also in this I see opportunities to be able to take trades. More so in particular for me, it would have been looking at different potential buy orders. Because if you're looking to trade a break and a retest, right? You can come over here and say, out of all of this consolidation here, price broke out, came back down, and went up. Now, guess what you can say? Even if you're still trading off of this zone here, right? Even if you're still trading off of this zone, this resistance zone here. So let me remove this, and let's just say this was your zone from here, right? This is your resistance zone. This is your support zone. And even if I extended this all the way over like so, right, man, hey, this is the resistance zone that eventually became a newfound level of support. Change the color on that. I can say, okay, it broke out. If you want to trade off of these candles right here, this bullish candle, this bearish candle, the breakout, the retest, right? Those impulse candles, and then you could have took an entry here and took this up, and you could have got in here for potential of, let's just say, 95 pips, right? So from there, you can say, okay, price was coming back down to retest this area. Almost did it right here, right? But look what happened over here. If you were patient and you saw it was still coming down, it came back over here and retested this area once again. And it literally, this then, let's just say, I can't see the other ones that are a little smaller, but even if it was one of those, let's just say right here, depending on what you're trading, right? The banks, they're going to come back down into to this candle here, which is the last bearish candle before the move up. So they're going to bring price right back down into that candle, which they did. So you can either trade off the resistance line or off of the candle here. So if I say, okay, if price even pushes down past this level of resistance that became a strong area of support, they're going to come back into this candle here. All right. So if I just take this and show you, right, take a horizontal right here, and look what it did. Price literally came back down into this candle, boom, right here, okay? Price literally came back down into this candle. See, because right here, right, this will be what's called a second mitigation. So, and why is this candle significant, guys? Because this candle was significant because right here, after this very large impulse candle here, or banker's candle as it's called, there was an imbalance left in the market, right? There was an imbalance left where there was a gap, and they had to come back to fill that gap, and they did it right here, right? Like you could have literally took an entry here, had your stop under here based off of this candle coming back to retest, and you literally had essentially only would have had, you would have had a stop loss here of, let's say if your entry would have been literally right here, you had a stop loss of about 15 pips. If you say so, you could have did 20 pips, right? And if you don't went up to 90 pips, guys, that's over a 1 to 4 risk reward off of that. But they came back into it right here, price shot up, but then it came back down, and literally on this candle, it touched it right there. And then what did price do after that? What did the banks do? They pushed price back up. Okay, they pushed price back up. All right. And then from here, price what? Price shot up, right? Went back up. And on this time when they went up, guess what they did? These equal highs right here at this resistance zone, they shot price up. And guess what? Anyone that was selling right here had their stop losses above here, right? They off of this touch, it came back, oh, double top, sell entry right here, and they could have took it down and sold. And if they were still trying to ride it down for it to continue down, even if they didn't move their stop losses in profit or whatever, and still had the stops up here on this next push up, price came back down. Then right here, they took liquidity out right here. Okay. So then after that, they brought price back down. Now, moving over to here. Okay. So what's significant now? What am I looking at and what am I seeing? Same thing happened right here. Get that out of there. Once again, we had it, right? This is a consolidation zone, okay, right here. Up, down on these 1 hour candles, right? This is creating support and resistance, okay? So there are zones within zones, right? Resistance level, support level right here. Because once this support level got broke, this was the next level of support, right? So what we have here, price, this last bearish candle. After this, they shot price up. The bank shot price up. Again, there's an imbalance left here with this candle. They came back down right into this candle. Okay, and this is where it's been for the last few hours. So I'll just move this up to show you here. Right into this candle, and this leads me to where I'm at in this trade. So not only have patience, guys, is the first thing. You want to have patience when you're trading, but you also want to confirm your entries. And one way you can do that, guys, is depending on how you're trading, is definitely going to the higher time frames where you're going to have a more concise and you're going to have more confirmation, right? The higher the time frame, the more solid and more confirmed the entries, the moves are going to be. Okay, so it's like higher time frame analysis and work your way down, right? So I'm looking at the 1 hour and I'm saying, okay, this is great right here. This candle, this is the last bearish candle. After this, bank shot price up. It came back down into this area. And look what it did. It literally touched off of this area, right? The support area off of the, literally right into the body of this candle for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 hours, guys. And then it shot up. Okay. So I took an entry in here. Price shot up. And I normally take partials, but I forgot to take partials this time. I should have, I don't know why I didn't. I was just waiting to get a certain amount of pips. Where I normally take partials, and then I move my stop loss into profit. Now, I did move my stop loss into profit, right? So what I did, I knew price was going to come back down, which it typically does. So I placed another order, and I'm back in this trade. I'm in a little higher than I want to be. If I were a little more patient, I could have got a better entry, right? Because I was also looking at price had already came down and filled the imbalance on this candle. So I waited to say, okay, this candle, this is actually a bearish candle right here. Price came up. I'm going to catch it going into the body of this candle here. Okay, where if I would have waited a little bit longer, I would have got it. But I got in at 99, so I'm about 8 pips off from where I want to get. And again, I'm just looking to give me a 1 or 2 risk reward, grab 60 pips out of here, right? TP up here, and I have a 30 pip stop loss. I actually have a 35 pip stop loss, right? Because I just wanted to, these lows right here, I want to clear under these lows. So what I'll do, I'll just increase my TP 5 pips, still to give me 1 or 2, right? Looking up for a profit of 65 pips, I have a stop loss of 35 pips, okay? So that's where I'm at. And if you look right here, we've had it where we have these two doji candles here where we have some indecision. What is price going to do? Is it going to go up? Is it going to go down? Right? Overall, after this, looked like it was moving up. We had this very strong bearish candle, which is at the 9 o'clock hour. Here we are at 10 o'clock, and it's looking like price wants to push up. But I'm not completely sure what's going to happen. This is still a strong area of support right here. Now, when I talked about higher time frame analysis, I go to the 4 hour to see what do I see. So when I go to the 4 hour chart, I'm looking here to see, hey, are there any imbalances in the market? Anything that's happening? Anything that needs to take place to help me give me my confirmation on the 1 hour? If we look here again, what do we have here? The market has been definitely right here, even here. It was in consolidation. It pulled back to look like it was going to go bearish. Then boom, reversal, went up. It's been a bullish market, right? We had consolidation right here. The bank shot price up, right? All the imbalances were filled here. Same thing, consolidation, but look what happened right here. And that's what helped me get a better confirmation for myself. So when I go look on this 4-hour chart, if you look right here, this was the last bearish candle before the bullish move up. We had the bullish candle here, but then we had the bullish engulfing candle here. Again, it created an imbalance in the market. Price came back down into this candle. You see right here, it filled this imbalance. And which is typically a gap in the market, if you're not sure what I'm talking about, right? So after this last bearish candle, I keep saying bullish, after this last bearish candle, the next candle being bullish is the candle after that needs to fill the gap. And this candle didn't do it, right? So if you're talking about from wick to wick or wick to the body, after this one was formed, right, it closed up here, okay, leaving a gap between these two candles. So the gap was filled right here with this candle here and this bearish candle right here. It came back down right here at the wick, and look on this next 4-hour candle, it came literally down into the body and almost to the wick. So now I know that this imbalance is filled. I'm looking at the 4-hour that's filled, so I'm expecting price to go back up. Okay. Now, why am I looking for it to go back up? There are imbalances on both sides, right? If you look here, all of these are filled, but not right here. So if price decides to come down and take out liquidity down here, right, it can just support this area, or it can take out the liquidity below this level of support. And now, boom, once it does that, there's going to be a very good chance it's going to start pushing down, right, and going bearish. And if it does, this will be the next area of where we have an imbalance. You see the bearish candle here, bullish candle right here. There's a gap in between here, right? Show you that gap really quickly. Gap here, nothing's touching it, right? So at some point, one of these candles is going to come back down to fill this gap, either to the wick or to the body. And then from there, it can continue down, or you can look for price to continue in reverse and push back up. Now, if we look here again, we're still on the 4-hour, right? You go see over here, where is there an imbalance still in the market? See, now I'm scrolling to see where price is at, and we're above all of this, and I'm going all the way back. I'm back in June. So it's a chance price may push down. It's a chance it may go up. So nothing here, nothing here. All of these gaps, that's filled. So we're here, right? There is no imbalance over here. But let's go to the daily. So if I'm gonna get a better confirmation, that's what I'm gonna do. I'm gonna go up one time frame again, because I know there's some imbalances that need to be filled on the lower time frame. But let me go up to the daily chart to see what needs to take place. So I go to the daily. Now what do we have? On the daily, look, oh my gosh, we have a lot of, you look right here, these wicks are showing where it was trying to break this area, but it was a little fake out, and it was pushing more to where it's looking like it wants to go, it wants to push back down and become bearish, right? So the wicks these are all obviously bearish candles with momentum pushing up, just showing, hey, we want to come up to this level. Fake outs, we're going more bearish. But now the momentum is going back the last couple of days, is going back bullish. So where is there an imbalance on the daily? It absolutely is right here. This last bearish candle, we have a bullish candle. So it could come back into here, right? And at some point it will come back to retest this bullish candle, this bearish candle right here, fill this imbalance and continue to push up. But my hopes are, with what I'm seeing right here now, there are imbalances still to this upside, okay? Right here. That's close, but it could push back up into this will be the next area where it can potentially, because we're above all of this. All of this is filled. It may come back up to this area and fill that imbalance. And that's all I'm seeing right now as far as with where it can potentially go back to the upside and continue to push up. So overall, it's looking like price is definitely going to go down at some point, right? We're going to reverse, and Euro USD is going to become bearish. But before that happens, if we drop back down to our lower time frames, I'm looking at here, open to price to say, hey, let's get this imbalance filled here first, because guess what? We have one right here on the 1 hour, right where I'm looking at, hey, where I'm going to get up out of here at, right? So if anything, they may push back up here. I'm looking at to get out here, like I said, my 65 pips, but if you look right here, they have money in here, right? We have the candle here, the last bullish candle, then the bearish engulfing candle down, right? Boom, but there's an imbalance right here in the market. So at some point, they're going to probably feel this imbalance, and then price will probably turn around and tank. That's what I'm looking for and hoping that's going to happen. So I'm in a buy for this, and now we're starting to get some bullish momentum on this 10 o'clock candle. So we'll see what happens, right? So price at some point is going to make a move where it's definitely going to continue to push up, or it's going to push down, or it can continue to consolidate. Only three ways it moves, but I'm looking forward to definitely continue to push up, fill this imbalance, and then from there, it may decide it's going to reverse and tank. So that's what I want to share with you guys, man. 2 tips for today. Have patience, guys, and do some confirmations on higher time frame analysis to look at what you're trying to see and give you better confirmation for your entries. So I hope you guys got value from this. I appreciate you guys. And listen, if you want to get my, I have a free ebook, guys, a free download, a cheat sheet. The 14 do's and don'ts of Forex trading comes with audio down detailing each step and a bonus 3-step checklist to help you when you get in the markets. If you want to grab that, go to trade.with.ed.com, okay, and you can pick that up. All right, or I'll put it in the comments. I have another link. You can get it at eddylharvey.com/14DOD. So I'll put it in there for you guys as well. All right. So with that being said, I appreciate you guys. Hope you got some value from this. Take care.